Good everyone, you're welcome to today's lesson at the Me of Right Mentor IOC. In this lesson, I'm going to be teaching you how to go back to your chart and be able to backtest. I know that is something that most forex traders do not do. You just learn a concept and you want to use that one to be able to place a buy or a sell on the marketplace. As I take it as a daily routine for me to always go back to the chart and look at why price behave the way it did. And in here we're going to be looking at our pairs, the dollar index, the euro USD, GBP USD, and also the card JPY, like we trade. So we're going to be doing some intermarket analysis and going into the chart to check why did the market go up at some point, why did it come down. All these things give you that professionalism you have ever been dreaming of as a price action trader. So in here we're going to be teaching the smart money concept. Let's just go right into the chart. Thank you very much. So you're welcome to my charts. In here, I have the dollar index. As you know, we use the dollar index as the benchmark towards trading our foreign currencies, from the euro to the pound to the New Zealand dollar, Australian dollar, and what have you. But we're focusing on the euro and the pound today. And I just want to be able to point it out here that for the fact that a dollar is buying does not mean that we will look to sell all other pairs right away. We bring in confluences that tells us that those individual pairs are going in line with the dollar at the time we want to take on a trade. So we analyze the dollar as the benchmark, then we go and see for confluences on the other pairs, and mostly for pairs like the pound, which is the GBP USD. Sometimes it does not go in sync with the dollar, and you want to be mindful of that. So currently now, this is learning from history. So we are checking on why this current week happened the way it did. Why did we see this week happen the way it did from the 19th of June 2023? So I want you to know that this current week we are in now is the end of the week, and is the end of the weekly candle, is the end of the monthly candle, is the end of the 3 months candle, and it's also the end of the 6 months candle. So this current week, once this week is being closed, the monthly candle for June will be closed. The 3 months candle, that means the quarter, we close. The 6 months candle we close, because we have had January, February, March, April, May, June. So that's 6 months. And once all those candles close, you want to be able to go back to your chart and look at how they fared, why they closed the way they did, where the next draw on liquidity, where can you look to enter and come in next. So all those things are very, very important, but I will not be going on in all that today. You can check the next set of videos that will be posted here in the YouTube channel. I'll be able to guide you as of that. But for now, we are learning while this current week happened the way it did. So from our previous lessons, I've told you that we are already short currently on the dollar. We filled a rejection block here as a draw on liquidity, and the next draw on liquidity on this particular time frame we are seeing are these lows here, 1, 2. So these are the lows. We are looking at the next draw on liquidity. Now, we don't just press our idea on the chart. We look for invalidations. We look for validation of our idea. So we look for invalidations of our idea, where will be the point that if the market takes out that point, usually found in a high or a low, it tells us that we have to look on the other side of the market and fair value has not been reached. That is invalidation. The validations are where are those points that if the market takes it out, it confirms our idea and we look to follow that particular order flow or that particular bias on the market. So I will explain that. So now, the invalidation that we are no longer bullish as of here is when market took out this low. Now, I'm saying this with respect to this particular time frame, weekly time frame. When we go to the daily time frame, you will see on that invalidation. There is when you switch time frames, it gives you invalidation and validations on a short-term level. So when we took out this low as on this particular time frame, it was our validation that we were short and invalidation that we are no longer long. I'll come again. When this low was being taken out, it was validation that we were now bearish and invalidation that we were no longer bullish. So as this low was also taken out, it was validation that we were bearish. So this was our shift in market structure SMS. Then from here, we have our BMS, our BMS, our BMS again. Understand? So this high was just a draw on liquidity, and we sold down to confirm the validation of our short by making a lower low at this point. So our next form of invalidation as of this point was here. We came and made a lower high, and we validated that by taking out weekly lows here, 1, 2. So we validated our short, but for now we have come to a discount. So we still have invalidations in place. If this weekly high is being taken out, I'm looking for price to buy up and come and take out this liquidity here and into the imbalance. But that is furthermore into the week, or else we are just coming to a point of the fair value here, the fair value gap here, and we sell short to take out these lows, 1, 2. So first of all, that is going furthermore into the week, but let us look on why we experience this green candle here. So as on this time frame, I told you that before now we would have been looking at this to be bearish. Now for our weekly range, we want to be able to mark out before the gates of the week. During your weekend, you want to be able to do your homework first. You mark out where will be your weekly range high and where will be your weekly range low. Those are things that you want to look out for. So your weekly range high and your weekly range low. If you are expecting a bearish week, your weekly range high is your point of origin and your weekly range low is your point of terminus. That is the strength of the order flow, the tide of the market will come from the resistance and it will terminate in a support. If your weekly range have been analyzed to be a bullish week for you, your weekly range low is the origin now, and your weekly range high will be the terminus. So your strength will start from the low and it will terminate in the high, at the high of the week. So you are keying off of a support to terminate at a resistance. So even if you are buying, you just don't want to be marking all your support. You mark both your support and resistance, because as you enter for a buy, you want to come out at a resistance that is your take profit. If you enter for a sell, you want to be able to come out at a support that is your take profit too. So on this particular time frame, we were here, we had this week, so we are still looking on the market going down. So where will be our resistance? This bearish order block, our weekly range high. We want to be able to cap that, our weekly range high. And where will be our support? Now we are looking on going short for the week. So 1 here. So we will look at this low here first, then we'll look at this and this. That is your bullish order block, because we expect this thing to stretch down up onto this point. That is on the weekly time frame. But you will be able to monitor price as price is painting on a daily basis. How did the daily candle form? Is it stretching? Is it expanding to your expected objective? If yes, you validate that. If no, what is it trying to tell me? What are the things am I to look out for? Those are the things that you want to be able to know and do very well as a day trader. It's very, very important. I've not started putting any marker here on my chart, but from what I've just said now, I believe you have been taking notes. If you have not been taking notes, go back and listen to what I've said. You need to really mark out your weekly range high and low if you are buying or selling. And as the daily candles are being painted, you want to be able to monitor price. If I am bearish, am I seeing previous day's low candle being taken out? That validates my objective. If I see previous daily high being taken out, then I'll begin to look out for, am I still looking at the right things, or are my invalidations being met? So these are things you want to look out for. So let me just go quickly and put up the markers for you. So this is my weekly bearish order block here. Now, this is the low, the first low you'll be looking at as of this particular time frame. So let me just highlight that. Let me make it red. So this is the first low you would have been looking at for quote for liquidity in a particular time frame. But now we'll streamline it down to a daily time frame. So now I told you previously in the previous video that we are looking at this from high to low. So at the different sections of that, you want to be able to mark something like this. If you or you mark it like this. Now, you see now that this point is a point of discount. So anywhere around this, you want to be able to track the quest for liquidity. Where is market coming down for liquidity? So as at this point, we had this here. So this was Monday's candle. Now, watch now on this time frame, you know that we are looking at this our next draw. Where will be the next draw? If we are looking down, we see a fair value gap here. A fair value gap here. So where will be our points of the weekly high, our origin, since we want to be able to sell? Because as of this week, I'm not telling you because of I've seen the after effect. No, I'm telling you what I did as of last week. So as of this now, we want to be able to sell. What we are able to presume that the market will do something like this. That was what we are thinking. Understand? I want to be able to tell you how, even if you you misunderstand the market current direction, you can easily get out without being hurt by what you did not see on time. So that's what I want to tell you. At last week, I wanted this to sell down as at this manner. Now, I will not just be pressing for that. I will be tracking price as price is pending for me on a daily basis. Now, I have this here. What is this? This is a fair value gap. So I have a fair value gap here. As on Mondays, you know that we really not go into the market because we just want to see what the market will do for us, because we want to be able to track where will the high of our week be. And you know, 70% of the time, our weekly high forms Monday to Wednesday. So I have that in my mind. So now, if you have not watched the video where I talk on Monday to Wednesday, making the high of the week, you just go down in the playlist, you see where I did a proper back test, and you can watch that video. You understand all I said there. So this is a daily fair value gap. So it's a draw on liquidity. We rallied up to close the fair value gap, and price rejected down. Look at the rejection. So we are day traders, so we go into our lower time frames. Now you see that not just did we rally up, we went towards a 4-hour mitigation block. There, a 4-hour mitigation block. So all this tells me I want to be able to look out for things to tell me that, oh, the market wants to really go where I want it to go to. So as on this time frame, we look out for things like, okay, does it want to reverse? Has it done any shift in market structure or whatsoever? So we want to be able to look out for things like that. Now, let me just go to the 1-hour time frame. So this was on Monday. It traded. It went into the fair value gap, but we had Tuesday really deep into the fair value gap. So This is it here. This is Monday's candle, and this is Tuesday. So you know readily that we normally call Monday to Wednesday making the high of the week in a bearish week. And for most times, the high of the week is usually seen on Tuesday between Monday and Wednesday. Tuesday most times makes the high or low of the week in a bearish or a bullish week. So now the fair value gap, it was being closed here and it came up onto this point. So this is daily fair value gap. This is the 4-hour mitigation block. So we have all that outlined. So we have our weekly origin here. Now, if you could not enter here based on you wanted more confirmations, of which I did, you will wait. As on Wednesday, we had this here. This was the confirmation. As Wednesday took out previous daily low. Now, observe what I'm saying now. You see previous daily low being raided. When they took out previous daily low, as it retraced back into that range, you want to be able to take your sell there. So this would have been an entry for you. So you would have taken this entry. If you did not enter here, if you did not enter here, now this low is the beginning of the daily fair value gap I told you about. If you did not enter here based on you are waiting for more confirmations, if you could not enter at this point, you would have waited until you would have gotten more confirmations, which were taken down of previous daily low, and it retraced back into the range. Then you would have looked for a sell. Now, that's one. If that you even went down to the 15 minutes time frame, you would have seen some things that are more fine-tuned, because in here you want to be able to see that you are selling at a sell side imbalance, buy side inefficiency, which is now we are seeing in the form of a fair value gap. So look at it here. On the 1 hour, you did not see market going into a fair value gap before it sold. You just saw a candle. But look at what it did here now on the 15 minutes. On 15 minutes, if you're not able to take that trade on the 1 hour, you can also come here and take this trade on the 15 minutes time frame. So you would have put your stop here and watch. So these are all possibilities that the market gave us as last week. These are all possibilities that the market gave us as on last week. Now, you want to do this with care. You want to be able to do this with care, because Tuesday now made the high. Wednesday, Thursday is usually a reversal day. Thursday is usually a reversal day, and or a continuation of the weekly profile if the market is still expanding lower. But now we had Thursday to be able to buy us at this much. Why did Thursday buy at reverse here? If you go to your commodities market, you will see the reasons for that, which I really cannot go now. But if you check your commodities market, from your soya bean to your wheat, your soya bean, your wheat, you're going to see why this made the reversal as at this point. And also GBP gave us a hindsight towards what to expect here as at this point. So GBP, your commodities market, the market has gone into a discount price, taking out liquidity into a discount of that higher time frame range back to a fair value gap. The same thing we saw for the Euro USD. So Euro USD went to a weekly level, which was bearish order block here. and daily high, it was being taken out. We had retraced to a fair value gap on the daily time frame and made a higher high. So naturally, you would have expected that, okay, since it has done this boom, it meant to be coming for this high, which would have naturally expected. But we saw all those the reversal patterns before we actually had this move down. So all happened on Thursday, which was a reversal day. So it came down here, and I've taken this low, but we don't just say that, okay, for the fact that it has come down, let me start looking to buy or sell. We wait for other further confirmation. Like, as the dollar, this is our invalidation for the market going long. If this is being taken out, then the market is going for the monthly consequent encroachment, at least as at this level. So we look at this, and this is entering into this fair value gap. So that will be our next door on liquidity if we see this weekly candles low being taken out. So, but that's not why we are here. We are here to learn from history. Okay, so the same thing that happened on the dollar also happened on the euro. So we had Monday. It made a consolidated day. It was not really strong. Then Tuesday, it took out Monday's low, expanded high, took out Monday's low. This is where we would have entered here. Perfect spot. It took out the high, we traced back here. So imagine the risk to reward here. That is 3.86. And now that is your daily high that we saw here. So that is it for the euro. And on Thursday, it reversed. Now, what were the markers that we saw? Watch at this closely. It gave you your shift in market structure, that pattern. It went high, came down and took out this low, went back to fill what? A fair value gap, just like we naturally see, a fair value gap here, and it sold down. So if you were here to even sell, what would you have gotten? So if you are selling to the daily fair value gap here, this is like 5R, almost like 5R of your risk. So these were all nice trades. Like I said, I saw the hindsight from the pound, the GBP, because this has already rallied up to a premium point as regards to your monthly time frame that according to our consequent encroachment into a fair value gap. This here is a mitigation block. So naturally, you would have been expecting lower prices for this particular pair. It even filled up this weekly fair value gap. So that was why, as at last week, I told you all about GBP, that GBP, I was avoiding it at that particular point because I was naturally expecting a deep retracement to the downside before we can continue the buys. But don't also forget that we have our invalidations for the buys currently as at this low. This is our invalidation here for the GBP. So here is our invalidation for the GBP for the longs. So in here, you want to be able to mark that out. So how could we have come in last week to trade? You know that this was a fair value gap, like I said. Now this start. So before the gate of the week, you must have marked out your previous weekly expected origin and your terminus. So what were the origin and terminus you expected for GBP USD? Now, as for this pair, it's always good sometimes to leave out a first trading day of the week, which we normally leave out Monday, to just see what the market wants to tell us. So as at Monday, we had this candle here. Tuesday, went into this previous daily range here and expanded lower. Wednesday came and filled the fair value gap and rejected. Thursday ultimately came to take out liquidity above this high, Monday's high, and reject down. This also did a consolidation Thursday reversal pattern for us. So this week, as for GBP, it was actually quite a week that I knew that we had to experience manipulation. That was why I told everyone to avoid it for a fact. But as at this day, I was actually buying to take my profit as at this high. I was expecting it to come to this high. Understand? But it just went here and then reversed. So, but it's all good. So this is how you would have engaged if we are coming to trade the GBP. Monday, you didn't trade. Tuesday took out a Shanghai just a little bit, but it was still in between the range we saw there. This is above 50% here, and it took out the low. So the pattern I normally teach you on when to know when the market have made the last point of manipulation. You see it here. It took out the previous candle's low, previous candle's high. As at this candle, if you trust this to be the fair valuation, you can even enter here and you see these are the kind of setups I normally tell you that just one of them can be able to pay you massively. You can imagine. So if you are taking this kind of setup, imagine just look at. So this is 24-hour. Can imagine if you really trust this kind the setup I normally teach, that if you have expected the fair valuation to be met, and you want to see that the next candle should not exceed the previous candles because they're taking the high and the low. Imagine what it did. As soon as it's opened, you must have entered here and boom, it went down. This was the kind of setup I took as at week before last on CAD-JPY, although I did it on the daily time frame because of I said that as now the next daily candle was being opened and I've seen that I've expected a fair valuation to be reached. That is the main thing. You don't just say that, okay, because it has taken out the previous candles high and low, I want to go. No, you must have already believed that you have experienced a form of fair value. First of all, you don't expect price to reach up to the upside because of they have come to a level of premium. If that is what you expect and you see this pattern here, just the next candle you can enter for a sale here and you put your stop loss here and you can imagine what it did now. It did 24-hour. This is crazy. This is crazy. This is crazy. So ultimately, as we went for that point, we dipped into the daily fair value gap. We did into the daily fair value gap, and It was very nice. You want to be able to check consequent encroachment, which was here. So consequent encroachment will be your minimum fill. So you can even come out at consequent encroachment, which is the half of the range of your fair value gap. 50% of the range of your fair value gap, that is your consequent encroachment. So if you are to take that particular trade I just called now, you would have taken your profit there. So don't say that it's because of I have the benefit of hindsight of the or the aftermath. No. So these are trades that those that actually understand the concept and you are looking at the market, you are following it up, you can actually look to take. So that's it. So this is a 24 hour. When we measure this, give out 24 hour here, there, about it. So that's massive. But we had manipulation on this particular pair, like I was able to see beforehand, and I told those that are just beginner to stay away from the market for now. We still went into this level. It was a 4-hour rejection block. This point, I remember calling it then. Look at it here. It was a 4-hour rejection block just at the peak, and we sold down. And we sold down. We filled the daily fair value gap, and C price went up again to now read all these plays because of, I told you that Thursday, you need to be very, very careful, actually in a consolidation profile. Understand? When the market is in a range, you need to be very, very careful, which we experienced as on last week. But for those that still want something to still take out of the marketplace, as market did this reading here, it came to also do your shift in market structure again, and the market went up. You must have been looking for a point of either fair value gap or something to now sell down to take out this low again, which was also ideal again. But most times you see that fair value gap in your lower time frames. I'm not seeing it now, but if I go to my lower time frame, I should be able to see something for a fact there. So let's just check the 15 minutes. Okay, we see one here, but nothing around here. Let's check the 5 minutes. Okay. This was closed, the 1 minute time frame. Still go down and check. So all of these things, you just want to be able to track price as it's happening, then I believe you can be able to benefit off of these results. So on Thursday, we're looking at Thursday. We said as the market made this rally down in price came. Now watch here. These are fine-tuned levels. Look at the fair value gap there. Entered it and sold. Boom. As it made the lower low, it went for what? A fair value gap here. So these are the time frames that mostly you will see all the fair value gaps being formed. All your your imbalances in price. It filled it and went there. Look at it. Look at it here. And it sold down. So these are things that you just want to watch out for before coming into the gates to trade. So I believe that this week will not be like last week that we had that kind of manipulation. Everything is already clear. We have our validations, we have our invalidations in place to look out for in the marketplace. So you want to be able to go back and check on how well you would have experienced this. Like I said, that if you have the weekly origin here, you want to come out at a terminal. So the weekly origin here was from a weekly level, that's a weekly fair value gap, and a monthly fair value gap. So you want to be able to cover it up with what? A daily fair value gap, which we had here. So look at it here, a daily fair value gap. So this would have been the range you would have been looking to trade in before the week started. So this would have been the range you would have been looking for before the week, so that if you want to expand things and you expect lower prices, this low would have been the next one you would have been looking for as at last week. If you're expecting lower prices. So, but this would have been the range really that we would have been looking for to trade. And also the dollar, we are coming into the gates. We had a weekly level here too. We had a weekly level here, and we do want to terminate at a daily. So even as we saw that the Tuesday made the high of the week, which was a daily, we want to cover up what in a daily. So this is our daily fair value gap. So that was why we had that kind of response as towards that. So you want to be able to check all that, and I'll see you once again this week. So even in here, I've told you what I readily expect if you are paying attention as to what will happen this week. So I'll be coming into trade in the Wednesday London payouts. So I want to see you there so that we can be able to cash out together in this marketplace. I remain your favorite mentor, IOC. I'll see you in the next lesson. Thank you very much.